Good afternoon, good morning, good evening, everyone, and welcome to Diary of a Trader. In this video, we're going to talk about how to place your first trade in Forex markets. Now, there's a good amount of data and literature out there on how to trade, and there are a ton of platforms and brokers out there who all have different setups, different interfaces, and all that on how to place an order. But no matter where you go and what software you're using or what broker, it's fairly universal in the aesthetics of how you place a trade. Depending on how you're trading, though, you really want to limit the kinds of trades. In my opinion, I think you should limit your trades to stop or limit orders. Unless you're actively trading, then you can do market orders. So, for instance, I'm looking at the pound dollar here, and if I want to trade this, if I want to go long on it, I have a couple options. So right up here, this is in TradingView, they allow you to connect to different brokers. Okay, so you have several brokers that you can attach yourself to here. If I go to select another broker. They have paper trading and Trade-O-Bait for futures. I use Trade-O-Bait for futures trading. Alpaca's so AMP futures. Oanda's for Forex. Forex.com is for Forex. TradeStation does futures data as well, and I believe stock market data. And then paper trading, and you could do paper trading if you wanted to, because paper trading is just demo trading. Now I'll tell you this. Demo trading teaches you nothing about trading. Okay? The only way that you're going to learn how to trade is by using real money. All right? So, I don't care how little amount of money you use, but you can find a Forex broker that allows you to trade for a very, very small amount. And that's the best way to go about it but you have to get used to losing money in order to trade. But you can do paper trading at first when you're first starting out. You're learning how markets work, you're learning how to place orders and all that. There's nothing wrong with that. So if I'm looking at the pound dollar here, and let's say I see that there's a couple swing highs right, or a couple highs right here where the wicks have topped out, back here, and then right here. And this is just an example. I don't trade on these fast time frames. But I'll say, okay, I'll want to buy it once it gets up to that value area. So I'll put a buy order in, and I don't want 10 lots. I just want one lot. And it's going to do a stop order, all right? And I can put, what's my profit target? I could say 30 pips. My stop would be below there. So that's rough at 130.92. You can do it a couple of two ways on how you place the trade. 130.92 would be 15.6 pips. You can do a price level, or you can put in how many pips you want. And so I hit buy. Now, if price reaches that target, if price moves up to that buy stop, then it'll execute, and I will have an active position. All right. And then once it's triggered, both my profit target and my stop target will have been generated. So while we're talking, we may see it hit. We'll see, but otherwise we can come back to it. We'll find something else to trade, like at the market. So when something's taken at the market, what we're talking about is an order that is taken immediately. Now, you should do this before every trade. Actually, you should never take a trade unless you already have a set profit target and a stop. All right. Determining your stop, there's other videos that we do where we talk about how to identify profit targets and stop targets, but these need to be determined before you even place the trade. Just don't look at the chart and say, "Oh my gosh, it's moving up. I want to buy this." You need to have a set target and a reason why you're taking the trade. So a market order, though, is taken right where you're at. So if I want to buy this at where right away, I just hit buy, and then the order is taken, and it will populate on the chart there. So I have that that order is active. There's my buy order. It's telling me right now it's down $13, which is $15, which is like, that's just like a pip and a half, because a full lot equals $10 roughly on the Kiwi dollar US dollar. On the short side of things, if we can find something here that excuse me, that we might want to maybe look at for the short side of the market, we could look at, maybe the US dollar, Canadian dollar. Here's a good one right here. So if I want to sell this, I'm like, let's say I already knew that I wanted to short this. I could just do a market short. I'm going to take 30 pips of profit. I want my stop to be about 15 pips. Oh, make sure that I'm on the sell side of it. And that'll take the sell. Now, we don't always have to front run our orders, which means we don't have to wait for price to come down to it, or if we're buying something, we can do limit orders too. Limit orders are great for when you are waiting for a pullback of some sort. And if I can find a chart here, if I'm like, okay, I want to go long, but I want to wait, or if I want to go, let me see, something that I don't have a trade position on this demo account. All right, so, okay, here we go. For like the euro dollar, let's say I'm like, well, if price comes back down to the low of the current hourly candle, then I'll go long. So what I could do is I could go to trade, could do a buy limit order. All right, I put in how many lots or partial lots I want. I'll identify my profit target. Let's say I'll exit once we get up to that swing high here where these swings are at. So I can put my price level in there at 111.30. I'll put my stop below the prior hourly low at 111.06. Ooh, I don't like that actually. That's too close. I'll put it down below. I'll put it down the last swing low here, the deeper swing low. So 111 even, or rather 1098, just to be safe. So if price comes down to here, it comes back. A limit order is basically saying I'm not willing to pay more than this price for that. I'm waiting for it to come to my price level. All right. There's a lot of reasons why you'd want to do that. You could put for pullbacks. Pullbacks occur when let's look at the dollar yen, for example. So a good idea of a pullback is what occurred right here. You saw price trade higher, and then we got stopped here and it came down. That was a pullback. And we could identify a pullback level, various ways from prior swing structure. So if we were looking at this swing low here, and we don't draw Fibonacci traces from one extreme to the next, we actually find the confirmation swing, which would be right here. And if I saw this trading up, and if it went beyond it, I would say my limit buy order would be right there, and that would have filled and would have been okay. And looking at something right here, where as long as we're moving up or swinging up, I would probably put just a little bit above that 618 Fibonacci level. I could put a limit order right there. So if price were to come back down to here, that would fulfill my buy. Well, rather, I wanted that to be a buy stop, but modify order. Well, you get what I mean. So yeah, again, the things that you want to avoid doing are just taking trades blindly. Have a plan in place. Know why you're taking the trade. Fill out a trade journal. Keep track of the reasons why you're doing something, because you'll want to be able to reflect back on reasons why. Now, I'll say this: you can have a trade that you took and it hits your stop loss and lose money, but there was nothing wrong with the trade. Okay, a losing trade does not mean you made a poor trade. All right. Any trade you take where you did not move your stop to lose more money is a winning trade in my book. All right. When you determine the amount of risk that each trade is that you're going to take, and you've established that risk, that is something that you need to be resolved internally to know that that is how much money you're going to lose. That's how much money you're going to risk. So when it does happen, it should not bother you that much. It should never be a surprise to you how much money you lose on a trade. If it is, you're doing it wrong. Thanks for watching this video, and I look forward to speaking with you in our future videos.